It's December 11th. The Bank of Canada announced a 0.5% reduction in its key policy rate, bringing it down to 3.25%. This marks a significant shift as policymakers respond to economic challenges, including rising unemployment and subdued growth. But what does this mean for you? How much money are you saving every month, especially if you're carrying a mortgage or considering buying a home? Stick with me as we break it all down.
This is the Saskatchewan Real Estate Podcast.
So let's start with the why. The Bank of Canada's decision to cut rates is part of its effort to stimulate the economy. With higher unemployment and slower than expected growth, lower interest rates aim to encourage spending and borrowing. This isn't just about mortgages. Everything from personal loans to car financing could see changes. For those of us in real estate and mortgages, these decisions are monumental. Why? Because the Bank of Canada rate directly influences the prime rate, which in turn affects variable rate mortgages and lines of credit. Now, if you're a homeowner or prospective buyer, you might be wondering, how does this impact me directly? That's what we'll focus on next. If you are carrying a variable rate mortgage, this is good news. Payments are typically tied to the prime rate, which drops when the Bank of Canada cuts rates. This means lower monthly payments almost immediately, or the amount of money that's going towards the principal payment of the mortgage is getting bigger. Lower monthly payments could also be coming to your home equity lines of credit or HELOCs, which also track prime. For those with fixed rate mortgages, the story is a little different. Fixed rates are tied to bond yields, not directly to the Bank of Canada rate. However, the ripple effect of lower borrowing costs often pulls bond yields down, which can lead to better fixed rate offers in the weeks and months ahead. So if you are in the market for a new mortgage or looking to refinance, this could still be a win. Looking ahead, analysts expect this might not be the last rate cut. There's speculation that rates could continue to decline into 2025, potentially landing at 2.75% by the end of next year. If this happens, it could further reduce borrowing costs, giving homeowners even more room to save. This makes it a great time now to assess your mortgage strategy. Are you in a fixed rate that might benefit from refinancing? Is it time to lock in a variable rate before future adjustments? These are key questions to ask, and speaking to a mortgage professional can help you make the best decision for your financial goals. Here are a few tips to maximize the benefit of this rate environment. If you're on a variable rate mortgage, confirm with your lender how quickly the rate cut will impact your payments. Most changes are automatic, but timelines can vary. If you're considering a refinance, now is the time to crunch the numbers. Even small rate reductions can lead to significant savings over the life of your mortgage. If you've been struggling with high interest debt, this could also be the opportunity to refinance and pay that off. For new buyers, lower rates improve affordability, giving you more purchasing power in a competitive market. Remember that every situation is unique, so what's right for your neighbor might not be right for you. That's why it is so critical to get personalized advice when it comes to mortgage financing. Before I leave you, let's give you a breakdown specifically of what this rate cut means for folks who have every $100,000 of mortgage. Before I let you go, let's break down some real numbers for you to give an idea of the monthly household impact of this rate cut. For a $100,000 mortgage over a 25-year amortization, let's say before the rate cut, you were sitting at a variable rate of 5.05. This would be the bank's prime rate minus the discount. So your monthly payment would be looking at $587.51. After the 0.5% rate cut, you now have a new interest rate of 4.55%. The monthly payment drops to $558.67, saving you $28.84 for every $100,000 borrowed. These numbers might not seem huge at first, but over time, they add up. On a $400,000 mortgage, for example, a 0.5% cut could save you more than $115 per month or $1,400 over the year. So there you have it, another Bank of Canada rate cut and a golden opportunity to revisit your mortgage strategy. Whether you're a homeowner, a first-time home buyer, or just curious about how these changes affect the market, staying informed is key. If you're looking for a more personalized breakdown, don't hesitate to book a call with me using my booking link in the calendar below. If you are looking for a personalized breakdown, do not hesitate to book a call with me using my booking link in the description of this episode below. And with that, thank you for an incredible year on the Saskatchewan Real Estate Podcast. This is our final episode of 2024, and I could not be more grateful for everyone who made this year a success. To our amazing guests, thank you for sharing your insights and expertise. To my listeners, thank you for your support, your questions, and for tuning in week after week, and for some of you for becoming customers. This has been by far the most successful year of the podcast, and I look forward to growing even more next year. I'll be taking a short break, but I'll be back in February 2025 with more exciting guests, fresh topics, and everything you need to know about real estate and mortgages in Saskatchewan. Wishing you a happy holiday season and an incredible start to the new year. Happy house hunting in 2025. Until next year, I'm Ron Caroni, your Saskatchewan mortgage professional. Bye for now.